Joining us right now is Independent Advisor Alliance Chief Investment Officer Chris Zaccarelli. Chris, good to see you. Thanks very much. Sufficient rates where they are, or sufficient restriction is what the chairman said. What was your reaction to the Fed yesterday?
So I thought it was really interesting. You could tell the Fed was trying to be hawkish and really talk tough on inflation, but clearly they want to keep rates where they are. They don't want to be raising rates any higher. They think there's an opportunity to keep inflation coming back down, staying under control, and not causing recession. Ultimately, that's their goal, and clearly that would be great if that was possible. We think eventually we will have a recession, but we think for now the economy still continues to produce at a pretty high level. You know, it's up 4.9% in the last quarter. The 4 quarters before that, it was up only 2.4% across those 4 quarters. And the 4 quarters before that, it was only up about 2%. So the economy is continuing to produce. Really, the problem is inflation. Inflation's coming down, but it's too high. So we think the Fed is going to stay on hold and continue to wait and see if inflation will keep dropping. And they don't want to raise rates if they can help it.
Well, Mark Tepper market was very happy yesterday. Stocks rallied after the Fed decision, and now we're extending it this morning. Jump in here.
Yeah, obviously the market is acting as if the Fed dropping rates at some point in the near future is going to be bullish for the market. But I think what investors need to realize is that when you look back through history, 0% Fed funds rate is not normal. 3 to 4% mortgage rates are not normal. So it's been an abnormal period of time from 2008 through 2021. But Chris, I want to get your take on the jobs number that we're expecting out on Friday. Should we as investors prepare for another blockbuster headline number? But then when you actually look under the hood of the number, we come to find out that we're losing full-time jobs and adding part-time jobs, which really doesn't sound like a strong economy to me.
Yeah, the jobs market's been pretty muddled. You know, we had that really big number, last time they reported. And to your point, if you look between the surface or look under the surface, there's definitely a lot of mixed messaging there. I'm not really sure if we're going to have a blowout jobs number. I've seen the data really move up and down, and it's been pretty noisy. So I think, the job market, clearly unemployment is low. The question, you're asking is what's the quality of those jobs? And I think it's pretty mixed. I mean, ultimately, unemployment being low, inflation being high is really the two factors that the Fed is really grappling with right now. They want to keep unemployment at a low level. Inflation is too high, so they've raised rates to where they are. I agree with you. I don't think they're cutting anytime soon, and it would take a lot in order for the Fed to cut. But I do think they may be on pause for a long time. They've already skipped 2 meetings. We may be done with raising rates for the year and possibly even for this cycle. But in the meantime, what we're looking at is just, the market took a correction in the 3rd quarter of this year. Rates maybe stabilize where they are. The market can go higher to the end of the year. I think American business has been really adaptable, really strong. I think the positive story is just in American businesses and how they've made it through these past 3 to 4 years more than anything else, despite the policies in Washington, despite what we're seeing geopolitically around the world. There's been a lot of headwinds, and yet companies continue to earn and the economy continues to grow. So I think that's a positive, at least for the American consumer and American capitalism, for sure.
Yeah, so what have you learned from the earnings season so far? We've got another busy day of 3rd quarter earnings today. Starbucks just reported moments ago. They had a double beat, net sales up over 11%. We'll get Fox as well as Wendy's later on in the morning. And then, of course, the big kahuna of all is Apple after the close tonight. The iPhone maker expected to post its 4th consecutive decline in sales, Chris. Although we're still talking about a company that is valued at, what, $2.5 trillion or so. What are your expectations from Apple tonight, and how would you characterize the earnings season so far?
Yeah, I would say the earnings season's been mixed. You look at those large tech companies, some of them have done really well, like Microsoft and even Amazon. Others have stumbled a bit, like Google. And we'll see what happens with Apple. To your point, sales have been declining. They've really had to raise prices. They've really had to increase margins. They are, the largest company in the world. Their situation is probably different from all the others I mentioned. But in general, it looks like in the earnings season, there's been a mix. Some companies have been doing really well. Maybe that higher-end consumer is propelling them forward, whereas that average person, they're starting to feel the squeeze of the pandemic savings having run down, as well as the fact that higher interest rates are beginning to bite. So it's been a little bit mixed. I think out of Apple, they're a bellwether. We'll see what remains to be seen. They're the largest part of the S&P 500. So goes Apple, so goes the market. So I think more than anything, we'll be looking at Apple to see what's the likely direction of stocks over the next couple of months, because they really will probably lead the way either higher or lower, and we'll see how their earnings are this afternoon.
Okay, Chris, thanks very much. Chris Zaccarelli joining us on Markets this morning.